Boom. All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about the Fed and or the Federal Reserve and speculating on some of the words and actions they may be about to take, as well as talking about how those words and actions may impact the stock market in the very near future. Okay, so we got the back-to-back macro videos, you guys. I know this may not be the most exciting to some of you, but in a market environment where there's so much happening at a global scale, which is the case right now, we will dive into that. It's especially important to focus on the macro. You guys know that I believe as a trader, in terms of longevity as a trader, it's important to focus on the macro at all times, because when you understand the macro, it allows you to perform optimally within subsectors of the market. At least that's what I found personally, and I stand by that. But again, it's especially important to talk macro during times like this. Let's talk some macro. So macaroni and cheese, very cheesy. But all right, let's get into it, you guys. As always, we'll quickly go over the topics we'll be discussing. Keep it short and sweet today, you guys. Trading view in front of us, we're only going to be taking a look at the SPY or the S&P 500 ETF, the good old spider ETF. S&P 500, you guys, pretty much sums up, I mean, in my opinion, best sums up the stock market as a whole in one stock. So we will be taking a look at the SPY. I'll give you guys, as you can tell by the red arrow, my downside price targets. I am short-term bearish on the S&P, even though in the article we're about to look at may imply that we might see someone come to the rescue tomorrow, that someone being the Fed. Maybe that happens. At this moment in time, I stand by my bearish instincts. I am a hungry bear. I'm prepared for this. And I will give you guys my downside price targets from both a short and more medium-term scale in the case that my short-term target is broken through, okay, to the downside, of course. So we'll talk the SPY as we close out the video. But first, we do have to go over this article just released by CNBC titled, "The Fed Will Try to Soothe Markets Wednesday While Preparing Investors for an End to Bond Buying." Okay, so let's close that guy. It's a little distracting. But we'll go through this, talk about good old Jerome Powell and the Federal Reserve, as well as some of the actions, once again, the words and actions they may be taking tomorrow. By the time many of you guys watch this, this may have already gone down, but we will go through this now. And again, you guys, it's just good to understand these things. Even if you're just day trading, if you're focused solely on technicals, at some point, you will become an investor. And once you're investing, the macro becomes just that much more important, okay? So before we get to reading this banger of an article, please, you guys, give the video a like if you do go on to gain value from it today. It really means a lot. Subscribe to the channel if you're new around here, want to catch more content like this. A lot of the time covering more fun things like that. That's actually why I just posted the video before this. Talk about fun stuff. You guys know we love revolutionary sectors, but you have to adapt to the times. That's the most important part of being a swing trader, which I am, is adapting to the times. Adapt or you get slapped, and that's just the game. This game works in cycles. It's just the law of the land, okay? And if you guys do want to know exactly how I've had a pretty good week so far, can't freaking speak, how I've had a pretty solid week so far, definitely a lucrative week for myself, even though the greater market environment has been pretty red, is because I was hedged. If you want to know exactly how I'm personally structuring my portfolio through what I perceive to be volatile times within the equity markets and the crypto markets as well, pretty much all the financial markets, because the dollar looks great, in all honesty. First link down below. $15 a month or $40 for every 3 months. As it states, complete breakdown of my entire personal portfolio, call options, put options, stock positions, crypto positions. Do update that every single trading day during market hours. And along with every update, I also send out a complimentary and comprehensive email newsletter, rationalizing my thoughts, explaining my trades, and letting you guys know why I'm doing what I'm doing, okay? So, again, $15 a month, $40 every 3 months, to each their own. Do my best to make that worth your hard-earned money. But if not, no worries at all. I appreciate your time right now. Let's get into this article, and then we'll take a look at this, at the SPY, at the S&P 500 on the charts, all right? So, key points. The Fed's September meeting has been widely anticipated since the central bank is expected to signal that it's close to announcing the taper of its bond purchase program. So, good for the dollar. Good news for US dollar. Bad news for everything that trades against it, which is a lot of things. That's why you guys know I always say the US dollar is at the base of macro. That will be the first big step away from policies it put in place to counteract the impact of the pandemic on the economy and the financial markets. But the focus of markets will be squarely on what the Fed now forecasts for interest rates and inflation. After Monday's market turbulence, say what's up to JP. After Monday's market turbulence, the Federal Reserve's challenge will be to sound reassuring while acknowledging it's preparing to make its first major step away from the easy policies it put in place to fight the pandemic. The Fed will release a policy statement along with the economic and interest rate forecast it issues quarterly at the end of its two-day meeting Wednesday afternoon. Fed Chair JP is expected to brief the media at 2:30 p.m. Eastern Time, so 8:30 a.m. Hawaii time. I'm sure that's irrelevant to all of you, but 2:30 p.m. Eastern time. The central bank is widely expected to indicate it is getting ready to announce it will start pouring back its $120 billion in monthly purchases of treasury and mortgage-backed securities. I think they're going to lay out that they had a discussion on tapering. I don't think they're going to provide any details. I think they're going to provide a framework where they can start doing it in November or December. BlackRock, one of the biggest institutions in the world, Chief Investment Officer of Global Fixed Income, Rick Reeder, said, a few more paragraphs here, you guys, and then I'll give you guys my thoughts as we dive into the charts. All right, so Fed's meeting began Tuesday following a turbulent day in global markets on worries that China's big property developer, Evergrande, could collapse and spread contagion outside China's borders. If you guys aren't familiar with the Evergrande thing, one of China's largest real estate companies, one of the largest companies in the entirety of the world based on revenue. And this could be a very, very big deal in the case that China, the Chinese government, the good old CCP over there, decides not to bail them out. If they decide they want to teach them a lesson and not bail them out, that will 100% make waves in the worst of ways, not with the $S. That will make red waves. They'll make those waves are going to be bloody throughout the rest of the markets because that's pretty much Lehman Brothers just overseas, okay? And again, that China's huge. China's one of the largest economies in the entire world, like right behind the U.S. pretty much. So if one of their largest real estate companies, and real estate's huge, is obviously everyone needs a place to live, everyone needs a place to be, everyone needs an office, that's a big deal. Okay, so just keep that in mind, you guys. In terms of the macro, that's probably the single most important factor is whether or not the CCP decides to bail out Evergrande, okay? So the S&P500 had its worst day since May on Monday. Stocks stabilized a bit Tuesday as investors look to the Chinese government to contain the situation. Shout out VIX and UVXY. Shout out VIXY and UVXY. Huge day for the home team and SPXL puts. Shout out the portfolio group. Does the last couple of days price action in markets or China have an influence on their thinking? My guess is it's going to enter the discussion, but I still think they're going to end up at the same place we're going to end up in regardless. Ryder said he expects the Fed to cut back the purchases at a pace of $10 billion treasuries and $5 billion mortgage-backed securities a month once it starts the taper. Okay, so again, you guys, tapering back these just purchases, these security purchases and bond purchases. When the Fed does that, that makes dollars worth more. There is more demand for dollars because there is less being pumped into the circulating supply, okay? That's supply-demand economics 101 right there. Less dollars, more valuable dollars. I know we've printed them, the money printer been going burr. So that's finally going to start to slow down. And ultimately, once that starts slowing down, that will create higher demand for the dollar. A strong dollar means a weaker everything that trades against it, especially considering everything has been absolutely ripping. And again, that's why the DXY, which is looking pretty good, or let's just take a look at the DXY just because I'm talking about it and I would feel incomplete if we didn't just look at it right now. So DXY, I'm just standing by what I've been saying since pretty much over here since almost we kicked off the month of September, broke back into this ascending channel, reclaimed this previous ascending channel, and it only makes sense to me from a technical perspective that DXY, again, higher high, higher low on the more medium term as well. Low, high, higher low. We'll probably set a higher high, and I do think that we will come up to test the top side of this ascending channel from a technical perspective. And again, you guys, with everything going on, strong fundamentals and strong technical tailwinds for the US dollar leads me to believe that we will probably see at least a $95 in the pretty near future, or 95 DXY, okay? So that is DXY. Let's talk S&P 500 or the SPY. Give you guys my downside price targets here, because again, I'm a bear and I'm a hungry bear, and I got some puts on the SPXL just straight up, and I got some calls on good old VIXY, and I had a big old VIXY share position as well. Okay, so from a technical perspective, just today, I'm recording today's Tuesday, September 21st. There we go. So Tuesday, September 21st is the time of recording. We saw, as expected, after a bloody Monday, once again, worst day the S&P has seen since the month of May. We did see the little dead cat bounce. Something falls hard, it bounces hard as well. The markets bounced back a little bit today, floating, just cruising between red and green. A lot of volatility, definitely a roller coaster today. Closed the day out red. Love to see that. I was keeping an eye on the short term, actually like 5 to 15 minute charts this morning. We did technically close the day below the line of support short term, so that implies, at least as a trader, again, from a technical perspective, we will see downside tomorrow. We'll see what the Fed has to say, because from a fundamental perspective, that obviously will make the most radical difference as to whether we see upside or downside, a green day or a red day tomorrow. Regardless, just with everything going on, again, the evergrande thing happening right now, the Fed is, you can tell there's fear in the air. You can smell the fear that's in the air right now. You can smell the hesitance amongst investors in the volatility and the roller coaster movement that we saw today. And my money, as I've been saying, and you guys, money's always where my mouth is. My money is on more downside. I'm hedged to the gills, okay? So first downside price target short term, like maybe by the end of this week or early next week, is going to be another just under 4%. So 3.65%. It's a satisfying number. 3.65% down over, I'm going to say within the next, I wouldn't be surprised it's Tuesday. I would not be surprised, in all honesty, if by Friday we see this correction. And the reason that this is my price target short term is because this is the base of the S&P's previous high prior to its last, what I would consider to be a fairly significant correction or a period of sideways movement. Okay, so April 16th, which is not even that long ago. If we zoom out, you guys can see just how much the SPY's run up since. You guys know how much the SPY's run up. I don't need to tell you that, but just the initial high, like, I think it's absolutely reasonable, even in not a crazy macro environment, which once again we are in right now. It's completely reasonable just to see a healthy like 10% correction from the high. From the high, that would lead to an 8% correction. So that's why this is my first target. This is like my very non-greedy price target for downside price target for the S&P is just under $420. But I do think, as you can tell by this big old bar right here, this bar of doom, that I do think we're going lower. And in all honesty, I think we are going to come down from current levels about another 12%. Okay. The reason this is my next price target, let's get rid of that. It's a little, just a little distracting. The reason that is my price target, we're going to zoom out a lot, is because this is a very, very significant long-term trend line for the S&P, for the S&P's massive megaphone pattern. Okay. Megaphone channel. Called a megaphone channel for very obvious reasons. Ascending channel, nice and perpendicular. The lines are perpendicular. Megaphone channel, they're spreading out like that. Okay, so big old megaphone channel dating all the way back to January, the beginning of 2018. So been in this one for years, and I do think that this previous line of pretty significant resistance, boom, touch point here. Once we broke out of here, we were already going pretty parabolic, but we were just pretty much since this break of this longer term ascending channel have seen just pretty consistent parabolic price action and new all-time highs every other day. Again, you guys, new all-time highs. Money has been printed. Technology is moving at a faster rate. It's exponential. Things are moving exponentially in terms of tech, the gains and progress, fundamental progress technology is seeing. In my opinion, it just still can't justify current valuations from a historical perspective. PE ratios are still way off, way overvalued, even though, once again, technology is increasing at a rapid rate. The US dollar supply is factually way more inflated than it's ever been in the past, because the money printer has been firing off. But again, valuation is still objectively high, and in an environment where money is slowing down, money is starting to run out, US dollars are becoming more scarce and valuable. It makes sense that things are just right now even more inflated. Asset inflation, which means that Bitcoin, the SPY, equity markets are inflated relative to the dollar. At least that's been my opinion. And right now, I do think we will see the ramifications of that when you take into account the global macro factors. Okay, so sum it up: previous line of resistance, long-term resistance on that megaphone channel, megaphone will come into play as new support. That would take us another 12% down from current levels at about $430. Price target for the S&P over the coming month or so is going to be about $380. Market, of course, you guys, if the Fed steps in and just says they're going to prop up the markets as artificially as they ever have, because they just simply won't allow 401ks, retired individuals' 401ks go down the drain, lose their voter base. We'll see what happens. I don't know. My money is still on more downside, and yeah, let's hope we see it. Once again, you guys, it means a lot if you guys give the video a like. If for some reason you're watching, you're not subscribed, please turn that red button gray. And again, if you want to know exactly how I'm going to be trading through this volatility or adapting my portfolio in the case that things straight up see a reversal tomorrow and what I'm buying, again, first link down below, $15 a month, $40 every 3 months. And that's a wrap, guys. I'll talk to you guys downstairs in the comments. Let me know whatever you're thinking about, what we just talked about, what the Fed's gonna do, where the market's going. You bull, you bear. Let me know in the comments down below, and I'll catch you downstairs. Okay. Until next time, you guys. Always remember, take action, make waves. Peace.